Welcome back to the Digital Asset Report. Crypto markets are under pressure this week. Bitcoin slipped below $110,000 today, dragging Ethereum, Solana, and Dogecoin down with it. More than $1 billion in leveraged long positions were liquidated in just 24 hours. This came as equities finally moved lower after a relentless multi-week uptrend. Let's dive into the news behind the price action. ETFs made headlines this week. Grayscale converted its digital large cap fund into the first true multi-asset crypto ETF. Hashdex quickly followed, expanding its NASDAQ crypto index ETF to include XRP, Solana, and Stellar. But so far, demand has been muted. Investors continue to favor single asset products like the Bitcoin and Ethereum ETFs, which together have attracted more than $23 billion this year alone. BlackRock isn't slowing down though. The world's largest asset manager just filed in Delaware for a Bitcoin premium income ETF. Unlike BlackRock's spot ETF, this new fund is designed to generate income through Bitcoin-related premiums, targeting investors who want yield instead of pure price exposure. Bitwise, one of the largest U.S. crypto asset managers, filed a proposal for an exchange-traded fund tied to Hyperliquid's native token, HYPE. Hyperliquid is a Layer 1 blockchain designed for decentralized finance with a focus on perpetual futures trading. The token has a market cap of $11 billion, making it the 21st largest cryptocurrency. This filing marks the first attempt to bring HYPE exposure to U.S. markets through an ETF. And stablecoins are also in focus right now. Cloudflare announced plans to launch NetDollar, a fully collateralized U.S. dollar token. The company says it will be built for automated machine-to-machine payments across networks and ecosystems. Meanwhile, Circle is exploring reversible USDC transactions to help victims of fraud or hacks. The proposal challenges crypto's ethos of immutability, but advocates say it could bring stablecoins closer to mainstream financial standards and build trust among institutions. In broader markets, the U.S. economy continues to show resilience. Gross domestic product was revised up to 3.8% growth in the second quarter, far stronger than first reported. The bump came from higher consumer spending, which rose at a 2.5% annual pace. Economists say momentum has carried into the third quarter, with forecasts pointing to more solid growth. For now, strong spending and steady hiring are keeping recession fears at bay, even as tariffs and policy uncertainty add pressure. And finally, Michael Saylor returned to the spotlight at the Bitcoin Treasuries Unconference in New York City last week. He framed Bitcoin as yield-generating digital capital, likening treasury companies to early Standard Oil. Saylor argued that miners recycle stranded energy while treasuries recycle stranded capital, unlocking trillions locked up in pensions, insurance, and institutional funds. He sees a bright future for Bitcoin.
I kind of expect that Bitcoin will outperform the S&P forever because the S&P is always going to be loaded down with real-world assets and entropic conditions. The companies are going to be currency derivatives, and they're going to have real-world assets that depreciate, and there are going to be political issues, and there's going to be chaos and war and expropriation and tariff and taxes and all of those things.
That's all for today. If you enjoyed this video, be sure to give us a like and a follow for more.